We are closing a week in which the Kenyan market has been under consistent pressure, closing the week down 2.5%. Are we seeing a repeat of what we've seen in international markets, where investor sentiment has been weakened by the events that have been taking place in North Africa, particularly Libya?
No, I wouldn't attribute the weakening in our markets, our equity and fixed income markets, to the happenings in North Africa. Basically, I think with our local market, especially the equity market, most companies that people are expecting to release results, that expectation that was there from the beginning of the year, most of the financial institutions have released, so the stock prices have begun to drop. And we should, when they've gotten to a certain level, we should see people coming back into the market. With the fixed income market, I'd say basically what's limiting activity is the inflation level that has risen. It's made quite a number of investors a bit jittery.
Are we seeing any of that money coming into the fixed income market, with investors perhaps rotating out of equities? To some extent, yes, but nothing really tangible, nothing that would affect the fixed income market per se. We don't expect that money to maybe push the yields any further down. Let's talk about the shilling itself, because it was also been under pressure against the US dollar, and of course that fans people's fears around the outlook for inflation. But at the same time, we have the central bank cutting interest rates. What's your sense in terms of the impact of the weaker shilling on the inflation outlook going forward, and what that might mean for the fixed income market?
I think the shilling, we should expect it as long as the oil. I think the weakening of the shilling has mostly been driven by the oil companies. So as long as oil prices remain high, we'll see a weaker shilling. And in terms of the fixed income market, I think inflation mostly will affect the short end of the curve. The long end of the curve seems rather stable at the moment, but everyone's watching. But we do expect inflation to ease off when the short trends begin around April. So as food prices begin to stabilize, the only thing I think pushing, the only pressure on inflation will be coming from energy costs.
Yeah, but are we beginning to see that reflected in the yields that we're currently getting, particularly around the latest bond auction?
Okay, we've seen, yes, we've actually seen it affecting the short end. Like what happened this week, the one-year Treasury bill went up to about levels of 3.9, and so did the 91-day T-bill, which also rose slightly. On the long end, I don't think we'll see it affecting the longer end bonds. We may see some fund managers accounting for it in their bids, but I wouldn't say not particularly, not immediately. If we keep up these levels of inflation, we may see it. But at the moment, no, not particularly.
Yeah. Give us an outlook then for the coming week. At least let's begin first of all in terms of the fixed income market. What are you expecting in terms of the data that's coming out in the Kenyan market?
As you know, this week the central bank decided to reopen the 30-year bond that they issued last month, and also to reopen a 5-year paper. Most of the market was not too happy about this, because the 30-year that was issued last month has not seen so much activity. I think it's not even traded more than 2 billion so far. So most of the market was not happy about this. In the coming week, we still expect activity to be limited somewhat, as most investors decide to sit back and just watch the market. And also some investors have decided, instead of coming to the primary market to look for papers, they'll wait for the 30-year, which they're expecting maybe to come in at levels above 13%.
Yeah. So what's that likely to mean then for interest rates and as well as the overall market for fixed income going forward?
I think we're seeing quite a bit of pressure. We may see a bit of pressure on interest rates, upward pressure with inflation, and also with we expect the Treasury to come to the market to try bridge the deficit from from foreign lending, and also from reduced revenue collection. So we will see upward pressure, although central bank is trying really hard to keep interest levels low, but upward pressure is there.
Yeah. What about also on the equities front? We saw Safaricom coming under huge pressure this week, but with very, very strong activity from both foreign as well as domestic investors.
Okay, what happened with Safaricom? I think at those levels we saw it trading.
it's expected that most investors would come in. I mean, anything below 3 shillings 50 cents is, for most people, is usually a buy. They buy, hold. Speculators will buy, hold, and expect to exit at levels of about 4 shillings. But the equity market, next, we may be seeing some results in this month of March. We're hoping those will drive activity.